Today I wanted to go over some indicators and show you why I think Bitcoin might be bottoming and why I'm flipping and starting to buy in again. I'm not saying necessarily that we can't make a lower low, but I do think that the sentiment is probably about as bearish as it's going to get unless something really bad happens. A lot of people are worried about the Ethereum merge and they seem to think that there's going to be a buy the rumor, sell the news situation. But I don't really see a buy the rumor situation going on right now. For it to be a buy the rumor, sell the news situation, I think we have to be seeing some buying going on, and it actually has to be going up into the merge. But that's not what's happening right now. We're actually seeing things go down because it looks like people are expecting it to dump right after the merge. So that could mean that the opposite is going to happen, and we could be seeing a sell the rumor and buy the news situation. Also, a lot of people are worried about this Mt. Gox repayment, and it's supposed to dump a lot of Bitcoin on the market, and people think it's going to dump the price. But no one has a definitive date for when it's actually going to be dumped on the market, and no one even knows if it's all going to be dumped on the market at the same time. And if it does go in staggered payments and then it's up at the top of the market, it'll probably be a diluted enough percentage of the total market cap that it's not actually going to have a significant downward pressure on the price. If it did all happen to dump onto the market right now, though, I think we would probably see a significant bit of sell-off, but I don't think that we would necessarily be going down catastrophically. I just think that we might be going back down to retest the level of about $17,000 if that did happen. But I don't really think it's actually going to. You've obviously probably heard the old saying that you should be fearful when people are greedy and greedy when people are fearful, and you should buy when there's blood in the streets. And that's what the big dogs are doing right now. While everybody else is scared and thinks we're going to be going down to new lower lows, BlackRock is over here, and as you may have even heard, 3 weeks ago they decided to launch a Bitcoin trust. This didn't have an immediate effect on the price of Bitcoin, but that's because BlackRock is smart money, and smart money doesn't just throw all of their money in at one time like we do. These guys are going to be slowly accumulating over the next few years, and if you don't know, BlackRock is already one of the biggest holders in almost every single company out there, and they're probably going to end up being one of the biggest holders of Bitcoin in the future as well. Whenever that happens, that means that a bunch of money is going to be pouring into Bitcoin slowly over time, and I think that that's going to have a great effect with the rest of the market as well, obviously, because whenever Bitcoin goes up or whenever Bitcoin goes down, the rest of the market usually tends to follow. Like I said, this is smart money, and whenever there's blood in the streets and these guys are buying and all the retail investors are selling, that's usually probably a good indicator that things are starting to get towards the bottom, because these smart money guys don't usually pour in a bunch of money at the top of the market. They usually wait and buy whenever all of the retail investors are selling to them. Right here we have a list of all of the biggest ETFs that own Bitcoin. And as you can see right now, Grayscale Bitcoin Trust is the biggest one, owning 643,572 Bitcoins. What do you think is going to happen if BlackRock starts pouring into the market and they end up being on the top of this list like they're on the top of every other list? That means that they would have to start buying and accumulate more than what Grayscale already has, and I think that would probably have a pretty positive impact on the price of Bitcoin and probably all of the rest of cryptocurrency as well. But if following what the smart money does isn't enough reason for you to jump back into the market, let's go over some of these technical indicators. Right here we have a graph that shows how many Bitcoin wallets have more than one Bitcoin. It's indicated by this yellow line, and as you can see, it's been pretty steeply on an incline recently, and I think this means that smart money is probably pouring their money into the market and buying from the retail investors, and they're getting ready for the next leg of the next bull market. Right here we have the Bitcoin Rainbow Price Chart indicator, and as you can see, it is all the way down here in the blue. Looking down here at the key for this chart, you can see that this is pretty much as low as it gets, and this is technically a fire sale apparently. Usually we don't spend very long down here in the dark blue, and we'll usually skip in and out of it, giving people time to accumulate, but this is the best time to accumulate, and usually after we get down here, we're reaching a bottom, and we're probably going to be hopefully forming a solid floor before we go back up into the next bull market. Also, I showed you guys this one recently, but as you can see, we are starting to dip even further down into the capitulation area here on the nupal, and this is also one of those indicators where we don't usually spend very much time down in this lower section of the capitulation area, and whenever we are down here, this usually indicates the best opportunity to buy and accumulate Bitcoin and other cryptocurrencies so that you can change your life in the next bull market. These are a lot of indicators that are pointing out that we could be at the bottom, but if that's not enough for you, let's go into some charts, and I'm going to show you why I think we could be seeing some bottoming formations, and this could be flipping bullish here in the next couple of days. As you can see, looking at the 4-hourly chart, we have been getting squeeze down into this downward wedge, and this is usually a bullish indicator with about a 70% chance of breaking to the upside, and the price target is the top of the wedge. We've been getting squeezed really tight down into this, between the top of the downward wedge and this orange line, which is the top of the previous bull market from 2017. And since we're turning that into support, if we do break out to the upside here, I think we're going to be having a pump up to about $25,000 at least. On the bearish side though, if I zoom out here a little bit, you can see that this was a bearish wedge or a rising wedge, and we broke out to the downside, and those have a price target of the bottom of the wedge, which is the opposite of a downward wedge, obviously. The bottom of this wedge is arguably down here at about $19,000 even, and that means that we could be coming down here for a little bit more of a dip and coming down to retest the bottom of this downward wedge before we do actually inevitably break out to the upside. However, I don't necessarily think that we have to come all the way down here. I think that we've pretty much filled this wedge out sufficiently, and I think that if we do break out here to the upside, it is hopefully going to be pumping up to about $25,000. But that's just really the beginning of the bullish news here, because if I really zoom out and go back here to the daily chart, you can see that we are in this really longer term downward wedge indicated by this white line right here and this blue line. So whenever we do break out of this, the price target for that is probably going to be the top of the wedge, which means back to the all-time highs eventually. This doesn't mean we're going to be going up in a straight line from there. It just means that we're probably not going to be making any lower lows until we actually do go back to the all-time highs again. We could still definitely trade sideways, and it could even take a couple years to get back up to the all-time high, because as you can see, this wedge has been going on for about a year, so it's probably going to take a while to get back to the top. On the bearish side, if we do come back down to retest the bottom of this wedge here, that could bring us back down to about $12,000. But I do think that hopefully if we break out of this downward wedge here on the smaller time scale, and I hope this isn't confusing you guys, but down here with that smaller downward wedge that I was talking about with a price target of about $25,000, if we do break out of that and go up to $25,000, then that will be officially a breakout of this bigger downward wedge. So if we do break out of this super small downward wedge here on the hourly chart, that is going to be a solid bottoming formation, and I think that means that we aren't going to be making any lower lows, and it's going to be the perfect time to accumulate, because that means we're at the bottom of the bear market. You might be wondering what these vertical lines are right here, and this red one was the Jackson Hole meeting, which had us have a dump right there, as you can see. But this next one, the yellow one, is the CPI reading, and then we have the Ethereum merge on the 15th, which is the blue line, which is just a couple days after the CPI reading on the 13th. And then, like a couple weeks later, on the 21st, we have the Fed meeting, and that's going to be the real ultimate decision that's going to show us if money is going to be pouring back into the market or not. I think that if we see a lower CPI reading here on the yellow line, then hopefully that will mean we have 2 month-over-month readings in a row, and the Fed won't do a 75 basis point hike or higher. If they do a 50 basis point hike or lower, then I think that means we've seen the peak of their rate hikes. That doesn't mean that they're done hiking rates. It just means that they're not going to be doing any increasingly higher rate hikes at month over month. And if that happens, then I think we're going to be seeing the positive sentiment come back into the market, because the reason the market goes down is usually just because of uncertainty, and the uncertainty has been if the Fed is going to continue making higher and higher interest rate hikes. If we start seeing them take the foot off the gas a little bit with these rate hikes, then I think a lot of the fear and uncertainty is going to be out of the market, and people are going to start looking to buy back in and get their positions back up. In the bearish case though, if the Fed does another 75 basis point hike, or God forbid they do a whole 100 basis point hike, then that means we're probably going to be seeing some more dumpiness, and we'll probably be coming back down to retest the bottom of this downward wedge again before we inevitably break out of this to the upside. Either way, I think that the risk to reward situation here is looking pretty good to the upside, and I also think that if we do go to the downside a little bit more, we are definitely still closer to the bottom than we are to the top, and this doesn't represent a very bad opportunity to buy even if we do see another leg lower. For this reason, I'm going to be starting to buy in a little bit more heavily here, especially once we break out of this downward wedge, but I will be keeping a little bit of dry powder on the side just in case we see a fake out and then we see another lower low, so I can take advantage of that dip as well. I'm not saying that it's confirmed yet, but I am starting to see these indications, and this is a good signal and what I've been waiting to see as an indication that we could be forming a floor. Also, if we do bounce right here and start going up, then I think this is a perfect double bottom, and that's another really huge indication of a bottom, and that means we're probably going to be going up from there. On top of that, we're seeing the MACD crossing over here on the daily chart. And if we go back here to the weekly chart, you can see that it's super oversold, and it does have a possible bullish divergence forming here as well. Additionally, there's also another bullish cross here on the MACD for the weekly chart. And if all of these start to play out to the upside, I think this could be what we're looking for, and I think this is going to be a solid bottom and an indication for me that I need to start pouring my money back into the markets. I know it's been a long time since I was bullish, and it does honestly feel weird, but that's whenever you want to be putting your money into the market, because like the sayings go, whenever people are fearful, you want to be greedy. And that's whenever it is psychologically hard to do so. But that's how you make life-changing wealth in the future. Whenever everybody's screaming that we're going to be going down, it's going to be really hard to keep throwing money into what seems like a burning dumpster fire. But that's why they say life-changing wealth is made in the bear market, and that's what I'm trying to do. So let me know what you guys think in the comments. Am I just losing my mind, or is this looking like it might be a solid floor? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you next time. Bye.